This is the Haulin Assets podcast, where we show you how to start and run your own trucking company. Ever wanted to go out on your own? Follow Chris as he goes through the highs and lows of running on his own authority. Welcome, everybody. Welcome to the Haulin Assets podcast, episode number 176, where we're going to be talking about everything you need to know about trucking insurance. I am Craig, your host. Over there, he is Chris.
How's it going, Craig?
Good.
You know why? You got to think about that for a second.
I did. I had to think about it because I haven't heard an Air Force jet in the last 6 hours or so, and I'm hoping that means that they're taking a break for the day.
Well, we are recording a little later in the day than normal, so they're probably done for the day. Like they can't work too long of hours, so I think we're probably okay.
Fair enough, except to the Air Force. All right, Chris. There's a word that I'm going to say to you that I know is going to get you into my favorite Chris mode.
Oh boy.
Which is righteous indignation. So Marriott. Go.
So we just had a driver deliver a load to a Marriott.
A hotel?
A hotel.
Okay.
And food stuff. And you know, a Marriott hotel is not your normal delivery location. And this is the downtown Marriott in Kansas City, Missouri. So
okay.
Busy area, kind of crazy. And because of that, the driver decides to call a day ahead to make sure everything's going to be okay. You know, explains, hey, I'm coming in a full size semi, 53-foot reefer trailer. Can I get into the dock? Are we going to be okay? And the person that was in charge of receiving this product, oh yeah, no problem. No problem at all. And so like he's okay, you know, and kind of asks her, okay, how should I approach it? What should I do? And she gives him some instructions that should have begun. Well, he gets there and the dock is only 12 feet 6, which
not going to happen.
Not tall enough. Yeah. So anyway, to make a long story short, another one of your
absolute favorite phrase. That gets me into my righteous indignation phase. Yeah.
He ends up getting unloaded hours after he was supposed to be unloaded, not backing up to the dock. Just a transfer of product that was a little bit of a nightmare. But in the whole process, you know, we talked to the broker, we talked to the person that's supposed to be receiving it, we talked to the dock workers. Like nobody wanted to take responsibility for this. And like putting it back on us, like the brokers are like, well, you probably know people in Kansas City, call somebody to get it unloaded. And it's like, why is this our problem to solve? Yeah, like literally that's what, and we're like, no, we're based out of Salt Lake. This driver is not from Kansas City. We have no contacts or connections in Kansas City to get this taken care of. And this isn't, you didn't tell us when we took this load that we needed to make arrangements to have it unloaded. That's typically your job.
So is this a broker you had worked with before and you have a relationship with?
It's one of the biggest brokers in the country.
Oh boy.
Maybe the biggest broker in the country. One that I'm not a super big fan of.
Okay. But that you use for out of necessity.
Yeah.
Okay. Well, so what was the resolution then? Did any heads roll proverbially?
I don't know if heads rolled. They should have. But they found somebody that could come in and unload it kind of off of the street.
So at what point, I know that the economics don't work this way, and that if people will excuse my French, I know you got kids in the cab of your truck as you're listening to us, right? But shit rolls downhill, right? And you don't have the power. You're not in a position of power to say you owe me $500 for the hours spent for the hours spent at the unloading location, not at the dock, which I'd say specifically. And you know, my driver couldn't go pick up the next load. He's sitting. This is a huge inconvenience. But shouldn't there be, like, isn't there a better way? How are we going to get it to the point where a trucking company like yourself, a smaller trucking company, can say, no, it's built in, it's priced into our contracts that if you screw up, the broker screws up, the receiver screws up, and we have to sit on our thumbs for 6 hours. We're billing you by the hour.
Wouldn't that be nice?
Wouldn't it be nice?
That would be amazing. And that's really, that's the way it should be. That's the way, business should work. Like, so nobody's kind of getting screwed.
Right.
With that being said, as a trucking company, we make mistakes sometimes and we do things that cause other people challenges and issues. But I'll tell you this, we're on the receiving end of that way more than we are on we're the problem end of that.
Right. Anyway, it just seems like there are a lot more stories like this that you haven't told me, I'm guessing.
It
happens all the time. Yeah. Oh, well, I guess that being said, Chris, we should move on to our main topic of discussion, and we'll can I reverse the saying? Can we get our dander back down?
That's
yeah. A lot of ohms going on in the studio now. All right, before we do that, of course, I'll remind everybody, HaulinAssetsLLC.com is where you can go for the history of the show, all the show notes. Every episode is on there. Of course, you can find that wherever fine podcasts are distributed. And then I just said that one. What's the other one that I'm supposed to do, Chris? Motor Carrier HQ. Yeah. MotorCarrierHQ.com. I've only done this 175 times before. MotorCarrierHQ.com is where you'll find the tools, the tips, and the people that you need to make that leap from employee driver to owner operator and beyond, if that is your desire. Let's see. Haulin Assets Academy. If you want to go the self-directed route, get some education that way. There are some genuinely, for internet courses, dirt cheap and extremely helpful courses there that kind of help you do the same thing, make that leap to owner operator. All right, Chris, let's talk insurance. This is going to be literally everything that anyone ever wanted to know about insurance, right?
Hopefully, yeah.
I'm kidding.
More than they want to know, but maybe not everything, absolutely everything that they need to know.
Fair enough. Okay, no, that's just to say we're going to try to give people a good primer on what they need to know at various stages and how insurance is going to play with your business. But we'll gloss over things. We may skip some stuff that it seems less relevant. So if you have any questions on this, once you get to the end of this discussion, find us on Facebook. Go to Haulin Assets LLC. You can leave comments either place. Just search Haulin Assets on Facebook. You can leave comments there. So if we leave anything out and you want to get some answers, then find us those places. Chris, you ready to dive in?
Let's do this.
Okay, so insurance is important for a lot of reasons, and I assume top of the list, or among the top of the list, is that this is a huge expense. This is something that is going to be on would it be on your fixed expenses? I think it's variable every few months.
Yeah, for the most part, it's a fixed expense. You're paying for it whether your truck's running or not.
Right.
You may be able to make some adjustments. That's kind of the detail that we're not going to get into today. But for all intents and purposes, it is a fixed expense, and it's one of the top 5 expenses in just about any trucking company. For Haulin Assets, it's really our 4th biggest expense. So behind fuel and driver pay, they kind of flop between 1 and 2 all the time. And then number 3, your equipment expense. So, purchasing the equipment and the maintenance, repairs, that kind of thing. And so then right behind that, number 4 is insurance.
That's amazing to me that it's right up there. Insurance feels like it should be one of those things where you're paying a small amount to get a potential return, if needed. But no, that's not quite.
I wish it was that, but it's a huge expense, and it's getting even worse.
Well, when you get these massive and incredibly expensive machines going 70 miles an hour down the highway, that's a lot to insure.
They can, but there's also a lot of, you see the billboards. If you've driven 5 miles down the freeway, you see the billboards of been involved in an accident with a semi-truck, give us a call.
Right.
Those lawyer billboards. That's a big reason why insurance costs have just gone out of control. And we're going to talk a little bit about that. Like Haulin Assets has been on the wrong side of those kind of things, and I'll talk a little bit about that as we kind of go through insurance.
Yeah, I was just going to ask because I know, or I should say, I suspect that this came up because you mentioned insurance as a pretty big expense in one of our recent financials episodes. And so was there a change in insurance rates?
There was. We just went through our annual insurance renewal. So once a year, you renew your insurance. We just finished ours. And so that's why this topic's kind of at the forefront of my mind. And I figured it would be no better time to kind of talk about it right now. And so, I think this is a good opportunity to talk about it. Haulin Assets, we had a pretty big increase in our premiums this year, like significant, to the point that it hurts a bit. And so we're going to talk about that. We're going to talk about some of the things that we can do to kind of try to maintain that and go from there.
Okay. So where do you want to start with? Do you want to start with your experience and kind of back into how it all worked and how these rates went up?
We'll talk about the experience as we kind of go through.
Okay.
So let's kind of jump into what are the biggest contributors to how much you're going to pay an insurance premium. So I've got kind of the three that are really the biggest factors. Maybe we'll talk about a fourth one. But the first one is essentially your loss history. When you're in the insurance industry, this is typically called your loss runs report. And this report shows how much you've paid in premium and then how much the insurance company has paid out due to claims. And so traditionally, until this last year, Haulin Assets has had really, 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 really clean loss runs, like really good. This last year, they haven't been so good. And the thing is so there's a one thing in that loss run that really kind of has hurt us. We have had some minor accidents this year. They've all been very minor. Like, I don't think we've had anything that's caused more than like $10,000 worth of damage to a vehicle. And our two biggest, so we've had two situations that have caused the biggest problem in our loss runs. And what's happened is, we'll take, for example, one of them. One of our drivers that no longer works for us was, and it wasn't necessarily because of this accident, it was a few other things, but he was backing into a stall at a truck stop, hit the front fender of another truck, caused damage to the fender. And the driver that was inside that other truck, I don't know how this happens, but he says he got injured.
Of course.
Right after the accident happens, he's out walking around. We've got video from our dash cam of him out walking around just like normal. But anyway, so what's happened with this is weeks down the road after the accident, he claims bodily injury to the extent of I don't know the exact numbers. I can tell you what's on our loss run report, but to the extent of he's claiming $300,000 of bodily injury. And so the insurance company hasn't paid that out yet, but they put on the loss run report what's called a reserve because it could pay out as much as $300,000. So that looks, really bad on us because, when we go out to get quotes from other insurance carriers, we have to provide those loss run reports, and they see that it's just a reserve. It's not an actual claim yet, but it's
still there.
It's still there, and so it still causes us issues. And we had several carriers this year who just flat out said we're not even going to quote it. So our current, we ended up going with the same carrier that we've had in the past.
Kind of by necessity.
By necessity, yeah. It was our best option, even with that significant increase. So, that's one thing that you kind of have to kind of keep in mind. Like it just goes to show it's so important to be safe, to have a good safety culture. Whether you're an owner operator or you're part of a fleet, just having that safety mentality that I'm not going to even make that little issue, that little fender bender, I'm not even going to do that because that still could potentially result in a big claim. Another one that we've got a reserve on for was one of our drivers. I think I talked about this. Lost his steer tire.
You mentioned both of these, actually.
Have I? Yeah. So steer tire blows, lady runs over it, causes damage to her car, and she claims bodily injury. And this was like $2,000 worth of damage to a car. Like, it's the tread of a tire.
Right.
Yeah.
And
it's ridiculous.
But she saw the billboards. And and I don't want to get too hung up on that. I think that would be an interesting story to follow up on in future episodes. How's it going with those claims? But that's interesting.
The whole point of this is why safety is so important. This is why minding the things that affect your insurance premium is so important. It's not something that you can just do at one point of the year at renewal time. This is something you have to be working on, cognizant of, and have intention with how you attack it throughout the entire year.
Okay. All right. So we've got the loss run reports. What are some other contributing factors?
So that's the first one and the one that has the biggest impact. And the second one's really what's called the CAB report. And CAB stands for Central Analysis Bureau. It's something basically every insurance company out there uses. They'll pull this report and it tells a whole bunch of things about your trucking company. So it pulls information about your safety record. It pulls information about your financials, including past insurance history. It pulls information about your operations, how many miles you're driving, trucks you have, all kinds of things like that. And
including what we were just talking about, crashes and claims and all of that.
Yep. It may not go as much into the claims piece. That's where the loss runs comes in, but inspections and violations, crashes, everything that you mentioned. So this CAB report's very important, and you've got some control over both of these things. Obviously, loss runs you have some control over. If you're an owner-operator, you have 100% control over your losses. Like if you get in an at-fault accident, you're
on the hook.
It's you. Yeah. If you're a fleet owner, you may not have quite as much control, but there's a lot of things you can do to mitigate and limit your exposure to losses. And there's things you can do to ensure that your CAB report is good. And if your CAB report is looking good, like your safety scores, your inspections are good, any roadside violations are minimal, all that kind of stuff is good. All that feeds into that CAB report and, is going to paint your company in either a good light or a bad light.
So does the one feed into the other then? As you're considering Haulin Assets loss run reports, that's feeding into your CAB report, right?
Not directly.
Not directly? Okay.
No, because the losses is really just what the insurance company has paid out.
Gotcha.
And the CAB report
is about the actual incidents themselves.
And the CAB report pulls most of what it derives is coming from public information. So, information that the FMCSA has, that kind of stuff.
DOT info.
Yeah, all that stuff. It's pulling a lot of information from public records.
Okay, so you've got both of those feeding into it. Is it fair to say, because I know that you've been, this has been a thing for you for a while, the safety culture, making sure that we're, passing inspections and doing the right thing. So your loss run reports are not looking so hot right now. Are your CAB reports looking okay?
Yeah, the CAB report's actually looking pretty good. And it's actually there was one little time period where it kind of spiked a little bit and it's come back down. So the insurance carrier can see that we're doing a lot of things right. And in reality, they know to a certain extent that, some of this stuff is kind of bogus. Like a couple of those claims are bogus, but we've had an uptick in claims. Even some, two of the claims, they're partially, part of it's legit, like the physical damage, that was legitimate. I just think the bodily injury, this is somebody who's trying, in both of those situations, somebody who's trying to unethically milk the system.
Sure.
Is how I'll put that. So, they say that, they see that, but they also have to hedge their bets. They've seen an uptick in in crashes. We had an uptick in crashes in 2024.
There you go. Okay. Now, this is all feeding into either your increase or decrease in your rates. Any other factors that we consider there?
There's several, but the only other one I really want to talk significantly about is hiring your drivers. So, they're going to look at the type of driver that you hire, or if you're an owner operator, the type of driver that you are. And, if you're hiring people that, consistently have hours of service violations, or have a large number of speeding tickets, or are inexperienced, and you're hiring that type of person, that's going to increase your rate.
Okay. All right. So again, these are things that we've talked about a lot in the past: safety culture, hiring culture, all of that. So people can go back and listen to that. We got a lot to get through though. So let's speed to the next thing we want to talk about, which is the key players in the insurance situation for your company, right? So there are people, companies, entities, whatever you want to call them, that are going to affect how this all shakes out, right? So why don't you start from the top? What's the first one we want to consider?
So
besides yourself, I suppose.
No. So when you think about insurance, there's like you mentioned, there's a lot of kind of key players, and it gets really confusing. And so I want to try to break it down because they all have a different role, and they're all important. And it's important that you understand what each one's role is. The more you know as you go into an insurance renewal, the better you're going to be able to navigate that situation and really be an advocate for you. So let's start at the very top. And the very top are insurance carriers. So these are the people, this is the company that is actually underwriting the risk, insuring your vehicles. And if there's a claim, they're the ones that are paying out.
Got it.
You typically, as the insured, do not interact with the carrier face-to-face, one-on-one, however you want to put it. You usually, there's an intermediary or a couple of intermediaries there that we'll get to. So they're there.
I'm looking at you. You're starting to grin a little bit. I can see the business owner in you, Mr. Chris, the MBA kind of guy going, oh, there's some inefficiencies between you and the carrier, right? Yeah. It's upping the cost.
They're like up in the clouds. Like you're never going to see them. They're like the Wizard of Oz behind the screen, right?
Okay.
So
right.
you're probably not going to interact directly with them.
So these are the Great Wests, the Century, the names that you hear.
Canal, Northland, Acuity, Progressive.
Right.
Those are all the insurance carriers. Then typically you have another layer with another individual that you're probably not going to interact with either. Now, this person's the underwriter. Now, the underwriter can either work directly for the insurance carrier, or sometimes are actually a third party that kind of contracts with the insurance carrier and underwrites the insurance premium based on guidelines that the carrier puts out. So, companies like Great West or Century, typically the underwriter works directly for the company. Companies like Northwest or Canal will typically have that third party. They aren't technically an employee of Northland or Canal, but they underwrite the premium based off of guidance that Canal and Northland put out.
Okay.
So again, they don't typically interact directly with you. But when we go down to the next layer, that's the person that you're going to interact with, and that's an insurance agency.
Okay.
Sometimes they're called an insurance broker, because they're brokering typically across multiple insurance carriers. One agency or one agent may have 5 different carriers that they work with.
Right. So my question now would be, all right, you've got the person that you're actually interfacing with, the agent or agency, and they're cutting through the layers to deal with the carriers themselves. Now, in business lending, it's kind of a truism that in a lot of ways, the banker matters more than the bank itself. The banks all operate pretty similarly, but if you know the right banker, that's somebody who knows how to deal with the underwriters, who knows how to get exceptions for you, who knows how to cut through the red tape. Is that true for insurance as well?
Absolutely. And you want to make sure, like you feel comfortable with the agent that you're working with. You want somebody that's got experience, and specifically somebody that has a lot of experience in trucking, because trucking is a very specific, very different risk. And there's a lot of different things that they can do to kind of advocate on your behalf. And one of the things that's important with this insurance agent is they typically are your advocate. They want to get you the best rate that they possibly can, because then you're more likely to stick with them, right? They want to do what's ethical, but they're going to try to, some of them are going to try to, they're going to push the underwriter, or they're going to say, hey, here's the story, the true story, at least putting a positive spin on everything that we possibly can to help the underwriter feel comfortable with you as a risk. Or tell the story, like in our situation with, hey, we've got these losses, we've also got these reserves. Let's tell the story of that. Let's tell what happened in each of those accidents. And some of them we provided video to show that, what our driver did. And there's just a lot of things that we gave our agent that our agent asked for, so that he could go to the underwriter on our behalf and advocate for us. And so understanding what some of those things are is important, but probably even more important is making sure you have a good agent that knows the questions to ask you and get the information out of you that he needs to go paint the best picture that he can for your company.
Any tips for people looking for the right insurance agent? Because I know, you call up an agency out of the blue. Maybe it's a larger agency with a lot of different brokers or agents that work there. You call them up out of the blue. Hey, I need to talk to somebody about getting some insurance for my trucking company, and they assign you to whoever. You don't know if you're getting somebody who's about to be fired or somebody who's the top performer in the company, right? So how does somebody go about making sure they get the right person?
Like with most things in life, experience matters. So, somebody that's been in trucking for several years is going to be able to advocate for you better. Another kind of easy button that you can always use is Motor Carrier HQ. We've got insurance agencies all across the country that we've essentially vetted, that we've worked with, that our clients have worked with, and we have experience with, and that we know are going to do a good job for you. Okay.
So do you, when you're looking for these agencies, or the agency that you want to hire on, are you comparison shopping? Can you kind of set them against each other to see who's going to come out on top for you?
That's a really, really good question, because yes and no. You do want to get as many essentially quotes and estimates as your quote insurance quotes as you can, but it's not the same as like when you're building a house. And typically the more estimates you can get, the better you're going to be, right? If you get 2 estimates, you're not painting a very good picture. You're probably way better off getting 3 to 5 estimates. Some people go crazy and get 10 different estimates, right? To have something done on your home. It doesn't really work the exact same way in insurance, because every agency, like we'll take Progressive Insurance as an example. Progressive Insurance will typically let just about any agency work with them.
Okay.
And so about every agency out there has access to Progressive Insurance. You get to, on the other end of the spectrum is like Century and Great West. They typically will only let a handful of agencies in each state or each region carry them. So like you take, for example, in Utah, I think there's only 2, maybe 3 agencies in the state of Utah. There's at least 3 agencies that can underwrite Great West Insurance. And something similar with Century Insurance. And so, you may have an agent that underwrites Great West, but they also do Northland, Acuity, Canal, Progressive. And then you may have another agency that does Century and also does Northland, Canal, Acuity, and Progressive. And so in reality there, you've got 2 agencies that each have access to 5 markets, but only 6 of those markets overlap.
Right.
Yeah. And so that's the thing. You're not getting 10 quotes there. You're really only getting 6, because like a Northland is not going to give a quote to 2 different agencies. They're only typically going to give your quote to the first agency that got them all the information they need to quote it.
Right.
And so typically, like kind of what I usually recommend with people is make sure you probably usually only need 2 or 3 agencies, but make sure you get quotes from, all those big guys. So like Great West, Century, those 2 usually will only quote you if you've been in business for like 2 or 3 years.
Mm-hmm.
Northland, sometimes will quote you the first year, but more likely the second and third year. But, Northland, Canal, Progressive, Acuity, try to get a quote from each one of those insurance carriers.
Okay. So we've got the practical side of it, but let me assert something that I don't know the truth of. Okay. And you tell me if this is right or wrong. But there's also a psychological component to it as well, where these insurance agents and agencies, they know each other. That it's not that big a world, so if you're in Wyoming or Nevada or, West Virginia, whatever the case may be, these folks know each other, and they know if you're shopping 10 different agencies, and suddenly if I'm agency A and I know that you're shopping 10 others, then I know my chances of getting your business are pretty low.
Yeah.
And so I'm not going to try that hard. Oh, yeah, sure, I'll throw some quotes your way, but I'm not going to try that hard. If I know that you're only talking to 2 or 3 agencies total, then suddenly my chances go way up, and I'm going to work pretty hard to get your business. Is that true in this case?
Absolutely. And I think the best way to actually go about doing that is to, set ground rules for each one of the agencies. Find out which carriers each one of them has access to and quotes, and tell each one of those agencies which ones they can quote. Like give one of them, Century, one of them Great West, one of them Northland, another one Canal. So each of them are able to quote, say, 2 or 3 markets, but they're not all trying to like race to the finish line
with the same carrier.
Market. Yeah. So if you can like be really upfront with them from the very beginning, before you even get them the complete packet, so everybody knows which ones they're quoting, and to not quote one of the other ones, that's the best way to go.
Okay.
And I, once you've been in business for a little while, you may want to adapt that a little bit, because I kind of adapt it. I usually give a little bit of a preference to my existing agent, because they know me, they know my business, they know the current history of it. And so, I'll usually let them quote the majority of the markets. And then I'm really at this point kind of only using 2. And then I'll let the other one quote the other markets that my current agent doesn't have access to.
Okay. But your current agent knows that it is possible, if they're not doing a good enough job, that you're going to jump ship.
And I always think it's a good idea to, not to keep them honest, but to like make sure that they know that they've got to like work for me and get as good a price as they can. Make sure that you do have at least 2 agents in play.
This is why I had to have a little street fight tournament with all the other podcast hosts in the area, and make sure they don't steal Haulin Assets from me. Right.
Exactly.
Yeah. Okay. So you're contacting agents. They're going to get some quotes for you from all these different carriers. What are they going to ask for? What do you need to provide?
Okay. So first and foremost, the quoting process, you don't want to leave it to the last minute. I recommend you have everything ready to go, and you get everything to each one of those agents right around 45 days before your policy is going to expire. Because it takes time for the underwriters to quote everything. And then if they need something that you don't have, there's time to get that from you. If you need extra time to tell a story, you've got time to kind of build that case and work for you. So the last thing you want to do is get desperate and get forced into, kind of rushing the process.
Right.
Because then you're typically going to overpay, and you're just going to get stressed out. So make sure you're giving yourself plenty of time to get all of that done. So as far as the things that you need, it's really not that difficult. You're going to have to provide typically 4 quarters worth of IFTA returns, which you should already have. So your 4 most recent quarters, that's pretty easy. The loss runs from the last 3 years. So you're typically going to have to go back to, like, if you've been with the same agent for 3 years, that's pretty easy. If you've jumped around a little bit, then you're probably going to have to go back to each agent and get a copy of those loss runs. Then you're just going to have to provide your up-to-date equipment list and your up-to-date driver list. And then one thing that you can also provide, this typically isn't necessarily required, but it makes things easy, is your current certificate of insurance. So this shows, all your current coverages, what limits they're at, what your deductibles are. It shows all that so that you can hand that to the people quoting it and say, hey, this is what my policy is right now. I want to match this.
Okay.
So if you've got a little...
So they're not starting from scratch.
Yeah. And they won't have to come back and ask you questions. And then that way also you're kind of comparing apples to apples when you're looking at each one of the different policies. And there are going to be differences in each policy. One may, for instance, have reefer breakdown coverage where another may not. And so, you'll need to look at those kind of things once you're evaluating the different policies.
Okay. And are you overlapping the timeline for your coverage, or are you signing up, the day that your other policy expires?
So, good question. Your policy is going to go effective. Like, say your policy runs through the 9th of a month. Your next policy is going to start on the 10th, so that there's no lapse in coverage. But with that being said, you don't want to wait until the 9th to bind that policy. Typically, I recommend at least a week before your policy is going to expire that you're signing on the dotted line and you're paying your down payment. You got to be prepared for that. We'll talk a little bit more in a second what that means. But the reason I recommend at least a week before is because once you start getting within that week, and you're starting to book loads that are going to be finished
several days later.
Either right before or even after your policy expires. Most brokers or shippers won't book a load with you. So they want to see that you've renewed your insurance policy, that you've got a new policy in place, and that's already in place when they book a load. Because the last thing they want to have happen is you on a load and there's some kind of claim and your insurance is expired, because that's just going to cause a headache for everybody.
Okay. Last question on timeline then. You say 45 days before your policy expires, get this process started. What is the least number of days that you would say is reasonable, and how early is too early to get started with this process?
I wouldn't start more than 60 days before. So 2 weeks, could you essentially do everything within 2 weeks? Possibly, but you're really losing a lot of control in that situation, because an underwriter may be swamped. They may not be able to get to it, or they're not going to be able to give it the time and attention that you deserve. And so
that's where
I think you're really gambling if you're not getting everything to them at least 30 days out.
Good. Okay. Yeah, I just wanted to see kind of what the outside ranges were. So no more than 60 days. That's good guidelines. All right. So
let's talk a little bit more about the down payment.
I was just about to get there.
Sweet. We're thinking alike.
So down payment.
So I mentioned that you need to be able to pay your down payment at the time that you bind the insurance. And this is something you have to prepare for, because in most situations, your down payment's going to be on the very low end, 10% of your policy. But it's very realistic that it could be as high as 25%. Usually the only time it's as low as 10% is if you're using a premium finance company and they're willing to assume some of the risk with it. So they only require 10% down, but then you're also paying interest on your insurance premium. So I'm not a huge fan of premium finance unless you absolutely need it. And sometimes you do. Sometimes it's, some insurance policies actually make you pay the full year premium up front. In that situation, for the most part, most people are going to have to premium finance it. And so if you have to, you have to. It is what it is. But be prepared that you're going to have to do most likely between 20 and 25% of your premium. Mm-hmm. So if your premium's $20,000 a year, you're coming up with $5,000 down payment.
Yeah. Okay. Well, that's as we discovered on a recent financials episode, that can be a significant line item on your expenses. So, All right, Chris, let's bring it home. Let's talk how to get the best price. I know this kind of wraps it all up together, right? How to get the best price on your insurance. This is going to pull together a lot of what we've talked about in the last 40 minutes or so, right?
Yep. Good business owners are intentional about what they do. And that doesn't ring any more true than with insurance. You've got to be intentional about your policies, procedures, and what you do. Intentional about your safety program. You need to be intentional about the type of dryers you hire. Intentional about your maintenance program. And essentially just overall intentional about how your company operates. And the whole reason behind that is if the underwriter, if you can show them and paint a story or a picture that shows that you're intentional about these things. And in most situations, what happens on the insurance side, like the losses and all that kind of stuff, is gonna line up with how you actually practice. Not always. Like I feel like our 2024 doesn't paint an accurate picture of what Haulin Assets is as a company and kind of what our safety culture is. But that kind of thing happens. But if you're intentional about it and you manage all these things well, your underwriter is going to see that, and they are going to build that into your premium. If they feel comfortable, your cost is going to be less. If they feel uncomfortable about you as a company, that's going to just cause your premiums to skyrocket.
So do what you can in all these areas, right?
Yep.
All right, Chris, any final thoughts on this before I offer some of my own?
Here, give me it. Let me.
No worries. Or I can just give you something to riff off of.
No, I've got one more paragraph. I'll just read, kind of go through that last one. Okay, so the things that we've talked about in this episode, you have to be working on them year round. You can't just wait until that 60 to 30 days before your policy renews to kind of start working on those things. You've got to work on them throughout the year so that you can best control your fourth or fifth biggest cost, your insurance cost. And keep in mind that trucking is a low margin business, and it's cash intensive, and profits are earned by the penny. And so you've got to be very deliberate about that and really cut your insurance costs as much as possible. Like Ben Franklin says, a penny saved is a penny earned. A dollar that you save in expenses is a dollar that goes right straight to your profit line. And so do everything you can to save on insurance expense.
Yeah. Don't wait. Make it happen now.
Yep.
Yeah, I love it. Now, one thing that I noticed we did not talk about in this episode, Chris, that people may be wondering about is, well, hang on. You said I was going to learn all about insurance. You didn't tell me what type of coverage I need and, what sort of plan I should be looking for. That's on purpose, right? Yeah. This is going to be an individual thing, company by company, owner-operator by owner-operator. So that's a question that's going to be best asked of a really good agent or agency, right?
Yep. And that just further proves the point that you need a good agent that has trucking experience, and not just a little bit of trucking experience, but has been around the block a time or two and knows what they're doing.
Okay. Well, Chris, I've got one more question for you after I remind everybody about HaulinAssetsLLC.com, about MotorCarrierHQ.com, and HaulinAssetsAcademy.com. Oh, and also like and subscribe and rate us 5 stars and all that stuff. Okay. Chris, before we go for the day, how was the convention?
The convention was awesome. I was
so to remind everybody where you were.
I was at the Mid-America Truck Show.
Okay.
Which it had been a while since we've gone, and it's the first time we've ever actually had a booth there, and it was so much fun getting to meet some of our listeners. I was pleasantly surprised. I mean, we'd probably have, I'd say, between 10 and 20 listeners a day come and swing by the booth and talk to us.
And every single one of them said, "Why isn't Craig here?"
Though actually, we did have that happen quite a few times. Where's Craig? I'm like, he didn't make the cut.
I need to slap that man in the face. Yeah. So yeah, any highlights? Anything memorable that you're going to take with you?
Just meeting the listeners was really cool. Like hearing their stories. was neat. It kind of gave me an idea that maybe next year, if we do this, we set up a little mini podcast studio and just interview
collect some
of
stories,
the listeners and collect some stories.
Yeah, that'd be awesome. I love that. Well, glad that you got to meet some folks who are listening, and sincerely to all of you who made it there and who haven't made it out to Matt's yet, we're glad that you listen. This is there's a reason that we do this show, and that reason is to be helpful and educational and help you achieve your dreams, and hopefully we do that. Chris, it's been a heck of a ride for 176 episodes now.
It has, crazy.
And we'll look forward to a bunch more. Thanks everybody for listening, and I guess we'll see you next time.
See you then.